That, let's get started with movers and shakers, and let's tell you about all the stocks and which stocks are in focus. So on top of mind is Cairn India as well as Vedanta. The boards have approved the merger of the two companies. Cairn shareholders will get one share for every one share of Vedanta held, and they'll also get one redeemable preference share in Vedanta. So first up, here's a little bit more from the management.
A simplification that will take place over time. And again, we're looking at creating those businesses over time. And right now we have the aluminum business, we have iron ore, we have a strong copper business in India, and we have a very, very strong zinc business, both in India, but also a wholly owned one on an international basis. And all of this we see over time evolving into business verticals, each run by their own respective chief executive, their own respective visions. And there'll be a sequence of approvals that will be required that period of time. And we'd expect the shareholders to be presented with that shareholder vote toward the fourth quarter of this year, calendar fourth quarter of this year.
Meanwhile, CNBC TV 18 also learns that the top management of Cairn India as well as Vedanta will be meeting the LIC today to explain the contours as well as benefits of the merger. Remember that LIC is the largest minority shareholder in Cairn India with a 9.1% stake. But let's also go across to Nigel, who's going to walk us through details of what the brokerages are making of this merger. Nigel.
That's right, Sumaira. If we just look at the stock prices, we're seeing that Vedanta is under some pressure today, but Cairn India is moving higher. I think in terms of the merger ratio of around 1:1, and you factor in the preference share allotment as well, it'll be in the ratio of around 1:1.05, and that's precisely what's playing out on those stocks. What are the brokerages saying? Axis Bank, they're very happy. They have a buy rating on the stock. Target price of around 237. They say this particular merger could lead to a big re-rating. They say that now, in fact, the merged entity will get access to Cairn India's cash of around $2.5 billion, and also the EBITDA of around $1 billion. In addition to this, their weightages could go up on various indices because now the free float will increase, and also promoter shareholding will come in lower. Credit Suisse as well, they maintain their outperform rating on the stock with a target price of around 250 rupees per share. They're impressed by the group simplification process, and valuation as well does support the stock at current levels. CLSA, meanwhile, with regard to Cairn India, they have a buy and they have a target price of around 250 rupees per share. But they say the merger plan may not go through, and if that is the case, then they could see a big 40 to 50% jump in Cairn India's stock price, because at current valuations, they say the stock is factoring in Brent crude prices at $50 per ton, and as we all know, it's at around already $60 per ton. So they say if it doesn't go through, then it could be a big positive. We have UBS as well. They are positive on Cairn India. They have a target price of close to around 210 rupees. They think that the merger is, it's a bit of a negative over there because they're not too impressed with the merger ratio. Barclays as well, they have an overweight rating on Cairn India, target price of around 275. But they say now Cairn India shareholders will also be vulnerable because now they have exposure to the power business. That's not been too great. The aluminum business as well hasn't been great either. So on the back of that, in fact, they're a bit cautious.
All right. Thanks a lot for that, Nigel. And just as an addition to that, here is our closing bell money control question of the day. Do you think minority shareholders will oppose the Cairn Vedanta merger? We mean minority shareholders of Cairn, of course. Log on to the moneycontrol.com post and post your responses there. We will read out some of the more interesting responses post 3:30 this afternoon.
All right. Also, JP Associates gains over 5% after CARE Ratings has revised their long-term non-convertible debentures ratings from BB- to BB+. Now, Pragya joins in with the fine print. Pragya.
Well, thanks a lot for that, Sumaira. As you rightly pointed out, there is an upgrade in the ratings as far as JP Associates is concerned for one of their non-convertible debentures. Now, the reason for the upgrade clearly is just about one reason that I could pick out from the press release is the fact that they are taking some comfort from the experienced promoter group, which has a long track record of good operations. However, they haven't, they have taken cognizance of the fact that there is a deterioration in the company's financial risk profile. There is a weakened debt coverage ratio also that they've seen for FY15. In fact, is lower than envisaged progress on the receipt of funds through the monetization of assets remains a key overhang as far as the stock is concerned. Going forward, the rating on the stock that CARE has will be dependent on the following factors, which is the ability of the company to improve the profitability and the ability to continue to raise funds through alternative sources, with respect to its obligations, and the level of support that the company gets from its subsidiaries, especially JPVL, which is Jaiprakash Power Ventures, and JP Infratech as well. Remember, in December 2014, CARE had actually downgraded the rating on the stock to a BBB-, which was a 9-year low as far as JP Associates is concerned. So from that perspective, it's definitely an uptick. But given the fact that it's become a battered stock completely, a penny stock, marking a new low in terms of its stock price every day, this is just a mild relief that has come in the way of JP Associates.
All right. The next stock we go to is Eicher Motors. It's gained in trade after CLSA initiated a buy rating on the stock. Sonia is joining us with the details of that report. Sonia.
Hi Lata, thanks for that. Well, there's an interesting background to this. CLSA is the only top brokerage which did not have a coverage on Eicher Motors so far. So it was the lone man standing, and now CLSA too has gone ahead and initiated coverage on Eicher Motors. They have a target price of 21,800, which is a 25% upside to the current market price. And the story is pretty much what we've been explaining for the last many weeks and months. The Royal Enfield business is doing extremely well. In fact, the management plans to launch 2 new Royal Enfield platforms over the next 2 years, and that will help them aid growth. Not just that, there is a good export story which is playing out as well. Most of the large two-wheeler markets do not have a mid-size luxury motorcycle. The Harley-Davidson is too expensive for many of those markets. So now Eicher Motors is exploring entering into many new export markets in the affordable luxury motorcycle segment with the Royal Enfield. CLSA expects a 30% CAGR growth in the 250cc motorcycle segment in the next 5 years, and they say that Royal Enfield will deliver a 33% volume and 47% CAGR over the next 3 years. Back to you.
All right, Sonia, thanks very much for that. Also, Power Grid is the top nifty loser today on news that the government has moved a cabinet note proposing sale of 5% of its stake in Power Grid. Pragya, you have more details on that?
Well, Sumira, at least at this point of time, it's an unconfirmed news. But given the fact that the news flow on the divestment with respect to, some of these names like Power Grid has been so active all through the course of the year that I won't be surprised if the story indeed is true. But like you said, the government, it seems, has moved a cabinet note proposing a sale of 5% of its stake in Power Grid. Remember, as of the 31st of March 2015, the government held roughly about 57.9% stake in the company. With this, their stake will come down to 52.9% as and when the stake sale does go through. Now, at the current market price of Power Grid, roughly about 140 odd rupees, the government will be able to raise roughly about 3,700 crores, because there will be a lot of supply pressure that comes, for the stock. You're seeing some pressure as far as the stock price is concerned. Remember, there are not too many triggers as far as Power Grid is concerned. It's a solid company with a solid business model, delivering on its earnings growth as well. So that remains on track. There could not be too much of a discount also that's offered to the shareholders, as we've seen in the past, few of the cases, say about a 5% or so. So maybe on the back of all of that sentiment negative, the stock is the top loser on the Nifty.
All right.
All right, thanks very much, guys, for joining in and for highlighting all the stocks which are buzzing at this hour. So let's quickly recap them for you then. There's JP Associates, Vedanta, Cairn India, Ramky Infra, Eicher Motors, as well as Power Grid, the stocks that we're tracking.